Hello, I'm Janine Firpo, and in this video, I'm going to be teaching you how to research what your stock funds hold. Not only what they hold, but also their performance, the fees you pay, and other important aspects of the fund that you will want to know about. And in order to pick the fund that we're going to look at today, I actually thought it would be kind of fun to do a little homework and determine what some people are saying are some of the best ESG funds in the market today. So in Google, I have put in a query for best ESG stock funds for 2021. We'll do a quick search. And the first thing that's come up for me is these 15 best ESG funds by an article by Kiplinger. So we will take a look at this and we will just scroll down this article until we come to the actual funds that they're recommending. And there it is. The first fund that they recommend is the Vanguard FTSE Social Index Fund Admiral. This is the first fund that this particular article is recommending. And if you did a search for this and you looked at all of the things that showed up, you'd find a lot of different information. A smart thing to do is to look at a couple of different sources and see which funds show up on several of them. If we scroll down a bit, we'll find that the ticker symbol for this particular fund is VFTAX. So the ticker or the stock symbol, fund symbol, is simply, generally in this case, a 5-letter acronym for the name of the fund. And we can use that to then do our research. So keeping VFTAX in mind, we're going to go to Morningstar, which happens to be the tool that I like to use to do my stock research. There are many tools on the web that you could choose. This just happens to be the one that I like. And the information that you find here, you can find on other sources as well, just laid out in a different fashion. So if we choose this particular fund that I'm talking about, we will drop into a front page, I would call it, of information about this particular fund. And what you'll see is that there are a number of additional tabs here that each have additional information behind them. And we're going to dig into all of this, but we're going to do it in pieces. So in this first video, I'm just going to focus on this front page and explain the things that are here. And in a subsequent video, we'll go into some of the other tabs. So one of the important things to note right away is what kind of a fund is this? And that you can find here. So this is a large blend. What that means is that primarily the stocks that are held by this fund are large cap stocks. And if you read the book, then you would know that a large cap fund, large cap stock, is a company that is worth between $10 billion to $200 billion, using the sources that we referenced in the book. So this is a pretty big company, but there are companies out there that are even larger. So this is a $10 billion to $200 billion company, is what this particular fund holds. We also see that it holds a blend. And what that means is it's holding a mix of value stock and growth stocks. And again, this was explained in the book, but just very quickly as a reminder, a value stock is a stock that is providing possibly some sort of dividend or some sort of value back to the investor, whereas a growth stock is a stock that you choose because you expect outsized growth from that particular company. So in a growth fund, you're taking a little bit more risk, but you're expecting a higher upside potential, generally speaking, whereas in a value fund, they are considered maybe less risky, but may not have the same kind of return expectations. That is a gross generalization and doesn't always hold true. One of the things that's very interesting, we'll come back here to this, and I'll go into this in detail more, is this box. Because this box very quickly shows you, just by seeing where the colored square is, it tells you what kind of fund this is. And this is called the Morningstar Style Box. In an earlier video from chapter 6, we talked about the style box in terms of fixed income. Here we're talking about the style box in terms of public equities, and they are different, and what they represent is different. So I'm going to come back to that toward the end of this video and explain to you exactly how that works. But before doing that, I wanted to draw your attention to some of the other things that are on the screen. Another really important thing to take into account is the expense ratio. And the expense ratio is basically the fee that you're paying to own this fund. So in this particular case, this is a very low fee. You're paying 14% in fees, just 14% in fees. And because that's 14%, that's known also as 14 basis points. It's 14 of 100, 14 basis points. The adjusted expense ratio is a calculation that takes some additional things into consideration. In much of the research that I've done, the adjusted expense ratio is usually the same as the expense ratio. And so this is a little bit more information and knowledge than I choose to know. And I focus primarily on the expense ratio. Another thing that's important to notice is that there is a minimum investment amount here of $3,000. So if you want to buy this fund, you have to pay at least $3,000 in to own this fund. It is an open status, which tells you that you have access to this fund. You can buy it. We also know that it's paying a yield of 1.11%. So there's actually an interest that's being paid off of this particular fund. And the turnover is 18%. Now, that is really important as well. Turnover is a key issue to be aware of because some funds will turn over close to 100%, which means over the course of the year, all of the assets in that fund are bought and sold over the course of the year. Some you may even see more than 100%. Now, the reason that matters is because when items in a fund are being bought and sold, if that fund is held in a taxable account, in other words, if you don't have that fund in an IRA or some other type of retirement fund, and there are capital gains that are made along the way as those assets are being bought and sold across the course of the year, then you could very well have tax implications at the end of the year. So my personal preference, and everyone is different, but my personal preference is to buy into funds that have a lower turnover because I don't want to end up with excessive taxes at the end of the year. But it's really your personal preference what you choose. And some of these funds that have higher turnovers may provide higher return. So you really, as always, have to do your homework and really understand what is going on with a particular investment before you make that investment. But that's what turnover means, and it's an important thing to understand. This is a fairly large fund. There's currently $12 billion invested in this fund. That's the total amount of money or assets under management. AUM is another term that you might hear, assets under management. And we also can see here how long the managers of this fund have been with the fund. This is a 5.31 years, which in some of the funds I've seen is on a shorter side. Some of these funds I'm familiar with have managers that have been with them quite some time. So this is all great information that you can discern from this page. There's also a star rating that Morningstar does where it rates particular funds as well. Now, I mentioned that I would explain a little more about this, the style box. So let's just go here. And here's a picture of that style box again. And you can see that we have both a horizontal and a vertical axis. And on the vertical axis, you can see that each of these rows determines whether you're talking about a large cap stock, a mid cap stock, where mid cap is anywhere from 2 billion to 10 billion, or a small cap stock. And the small cap stocks are around $500 million to $2 billion in size. Along the horizontal axis, you have the value stocks on the far left, growth stocks on the far right, and blend in the middle. So if you'll remember, what we just saw back here was a highlighted box in the top middle here, large cap blend. Now I'm going to scroll down on this page just a little because I want to show you something else that I think is important. And you will see that style box here is embedded in a larger matrix. And the reason this is important is because there are companies, Facebook and AT&T among them, that are bigger than large cap. So they are now in something that's called giant cap or mega cap. There are also companies that are very small. They're called micro or nano. And you also have companies now that are really trying to achieve accelerated growth. Again, Facebook here, according to this source, is an example of that. And then other companies that are really focused more on value and returning interest or a dividend to their shareholders. All right. So that's how the Morningstar Style Box works. And when you look at a front page of a particular fund, you will see very quickly, once you start to understand what the Style Box stands for, what it is. And with that, I'm going to stop this video and we will pick it up again in the next video of this series and talk about the performance and the risk of this particular fund. Thank you for watching.